Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Thursday, the 25th of October, 2018. We're about 4:15 p.m. Central Daylight Time. Another day where the dollar was stronger, the stock market up today, but you watch the NASDAQ going to get hit tomorrow because Amazon's earnings didn't come in all that well. It's actually their forward guidance that I don't think came in well. And you're down in the grains. Now, please understand, harvest is going 100 miles an hour. We're at the end and you keep getting supplies in. It is not uncommon when you have good-sized crops for prices to go down. The elevators, well, they're filling up, they'll lower their bids. You get to the point where it drops enough where the farmers decide what can they hold on their farms, and that starts putting in a base, a bottom. What we have missing this year, of course, is Chinese demand, and that is something to think about. So we had that rally recently where prices got over on a weekly chart. Remember, this is only of closes, up and over the 18-week average, and now it's back under it. And I know I was pretty clear here saying I think the market might just stall in that general area, and it has. When you take a look at the daily chart, you can see how this market's just let go. The market has gone up here from roughly the 905, 906 area all the way down 50 cents as this pressure continues to grow on the market. You see that on the swing line a lot clearer when you made a peak here, then a 904 peak and right down. The pattern, lower highs, lower lows, a vertical price drop, which is always difficult to trade. What's the normal bounce off of it is what you ask yourself. You can also see that the 18 and 100-day averages, they're curling down, moving more towards price at this point. And to me, what's important is you're getting down to the lower Bollinger Band where you know what I'm going to say. This is where I expect the pros to cover their shorts now. They did it back here when you hit it on the rally up. They lifted some there. So that Bollinger Band to me, especially when you get a vertical price move, an important number. And no, it is not I'm going to go get long there. That is not the concept of Bollinger Bands. You can do it any way you want. I have no control over you. In the slow stochastic, momentum down, oversold, approaching the lower Bollinger Band. Meal, you've gotten to the lower Bollinger Band 2 days in a row. Now you're riding it. You're sitting on it with an oversold condition. Nothing on these charts says that the pattern of the slow stochastic yet is rolling over and going to lock in to embed. It can happen, and it's certainly in the meal market can do it. It can do it in the soybeans, but you need both numbers that make up the slow stochastic. Right now, under 20, you don't have that at this point. In the soybean oil, this is also called riding the lower Bollinger Band, and that's why I tell you, if you think you're a wise guy and you buy that Bollinger Band thinking it's always going to go the other way, like you got out here, it fell back, how much heat before you get a bounce, if you get a bounce? I don't know. But it's riding the band, momentum is down, bias is down, trend is down. In the corn market, it joined the parade. Lower highs, lower lows, 360 and a quarter is the lower band. You're there. You hit 360 and a half as a low today, so I don't care if it hits the last quarter cents or not. I think the pros are now stepping out of the market at that number, and you are oversold. In the wheat market, now you've broken this market out. Now I want to show you. This is when you get a market trading sideways in the Bollinger Band. Yesterday the market broke out, and I know I said the question is it going to get thrown back in, or is this market going to try now to break itself out of that pattern, and it's got a shot at the downside? It's answering you. It's going to the downside. So it can stay oversold as it does this. Now it's catching people that were the wise guys saying, oh, I'm going to buy the last break low, and they're finding themselves in a bit of a problem. The sugar market, well, momentum is still embedded. Until it's lost, I have nothing to say but bullishness, and that's where you're at. In the coffee, you have lost the embedded reading. I am still looking for price and the 18-day average to make a run for each other. Today the market was up another 90, but it certainly gave up the best gain of the day. When we're coming to the cocoa market, you can see how the market's overbought, a big today move to the upside. Now let's go back and look at this chart. Yesterday, market down 50, today up 72. I mean, it's pretty crazy action. You got a higher high, lower low pattern. I don't know what to do with something like that. Cotton, pressure coming on the market. Fell down, made a new low, went back to the 18-day average and just sort of held there. Got allergies. They want to pick up on me right now. And in the slow stochastic, momentum down. You have a divergence here. You've got momentum down, the market trying to hold. The bias is flat because the 18-day average is neutral and you're not trending. You're really whipping around in sideways action right here. In the cattle market, well, now you still have the higher lows, higher highs, but you failed today. You got under the 18-day average, so the bias went down, and, the slow stochastic trying to point down as well here. It's not doing it yet, but it's trying, and the feeder cattle were unbelievable. Remember when it lost the embedded reading here? I said I thought price and the 18-day average would make a run for each other. I didn't expect it to hit it just the way that it did and instantly collapse, but that's exactly what occurred. So the market's void of an uptrend now, while the hogs, well, they're hanging on, but they're acting to me like they don't want to get to these upper Bollinger Bands. The market's knocked on the door when it was higher today. It was in overbought territory, but with the lower close, it gave that up. Looks a bit tired to me. Wouldn't be surprised if it pulled back to the 18-day average and just hanging around. Now, our firm specializes in working with commodity traders. So do I. You know, a lot of people don't know it, but, you know, if you're a mid-six-figure commodity account and you want somebody like me to be, let's assume you're an analyst, working with you, I do that. So it's either on commissions or other fees, but yes, that can all be worked out. But we talk these markets in great, great figures and details and ideas of hedging, speculating, buying for you, your needs. We do it all in different ways. How do you get to see that's you? The typical person out there, you want to work with this and you want to see what our customers see. Give us a call, go on our website, and you can click up here. We're even putting in safeguards so our information can't be passed around, and we'll be talking about that very shortly. We know it gets passed around. That won't be lasting more than a week or so, believe me. We've got some real cool safeguards coming in. In the meantime, I'm Ira Epstein. You have a great day.